Alrighty, good morning everybody. Welcome to the second episode of the SMC live stream here on YouTube. Very awesome to have you guys back. We had a really nice turnout yesterday, and I really hope you guys got some good value from what we had to talk about, from some of the concepts that we explained, some insights into how Hine and I approach the markets. But has everybody had a great trading week so far? And everybody just type in chat if you can hear me. I see I was just a bit muted there. But as I was saying, welcome back everybody to the SMC Livestream Mentorship episode 2. We had a really nice turnout of the stream yesterday. Really happy to have you guys all back, and I hope you guys got some good value from the concepts that we had to talk about yesterday and some insight into how Hine and I both approach the markets. But yeah, just type in chat, guys, if you've all had a good weekend, and also if you can hear us loud and clear.
Good morning, everyone. I'm just double checking if you guys can hear me as well. Just type in the chat if you guys can hear me and Jay.
All good, all good. All right, I'm just going to quickly start playing us some epic background music so we can have a bit of a upbeat vibe. We were thinking maybe we can turn this into a bit of a DJ show as well.
Get some song requests.
Don't you all think Hine looks like a full-time YouTuber with his brand new lighting setup? I think it's really sick.
No, we put the effort in there. We try.
Both good, can clearly hear you, all loud and clear. Yes, yes, awesome guys, awesome guys. Alrighty, so we can continue with Euro USD this morning. We'll follow through what happened yesterday. I'll show you the trade plan that I executed that we discussed actually on stream yesterday, and that was to start looking for shorts of these areas of supply, riding a bit of that M15 pullback. So what I was looking for then on the 1 minute time frame, why is my screen lagging a bit? As we mitigated this area of supply, again, just looking for basic AMD on the 1 minute time frame, just as entry confirmation with that initial reaction, sweep of that high, then the displacement fair value gap to go short, which was, according to the trade plan, was executed, set B in partials at about 4R, and we came back to BE. We actually targeted that M15 week high, but on the 4-hour time frame, and this is something that quite a couple of, especially new members that are new to this type of concept, just give me a sec. My screen is very laggy this morning. Just want to try something. There we go. Much better. We had a 4-hour liquidity sweep to the upside. Now, this was not a break of structure. Now, if you look carefully what's actually happening in this daily supply, on the 4-hour time frame, we've had our accumulation, manipulation, potential confirmation of distribution to start, to potentially start now catering for that overall 4-hour pullback, which we want to see at least mitigate the discount of this entire 4-hour swing range. So already understanding the 4-hour, we've had that 4-hour break, we're due for a bit of a pullback. That is what our expectation can be, immediately hopping onto the lower time frame and wait for those confirms to play out. So price now targeted the M15 strong high with a candle body closure, creating a new strong low, lowest point after the pullback that created that break of structure. So once price targets these M15 strong lows, which is the expectation, because we confirm the start of the 4-hour pullback once that M15 starts to shift bearish. So this is ideally what we want to see. We want to see these strong lows getting targeted, and ultimately from there we can expect a bit of an M15 pullback into areas of supply here, or in supply here at the premium of this range, to then start to look to get involved on shorts to ride that 4-hour pullback, targeting these weak lows and again areas of discount in the 4-hour swing range, which again later potentially going into next week or the following weeks after that is to start to expect the M15 to start shifting bullish, which will then be confirmation to continue targeting those 4-hour overall week highs. But also, one more thing you need to keep in mind, simply because we've now mitigated on the daily swing structural range, is the premium of the overall daily swing range. And again, as we discussed yesterday, how do we confirm the end of the daily pullback? Well, we confirm on our 4-hour time frame. 4 hour being the daily internal, M15 being the 4 hour internal. So there is also the possibility that price can continue bearish, take out the 4 hour strong lows, which will then be confirmation that 4 hour will have now 4 hour strong protected highs for a bit of a pullback into 4 hour S&D levels to then continue bearish, catering for the overall daily pro trend. Okay, but again, we don't need to worry about predicting that. This is just speculation. We can always react to price as it prints in time. So yeah, just to recap, what I would like to look for this morning is potentially a bit of an M15 pullback. If that M15 starts to shift internally bullish, potential pullback longs to these areas of supply. If price mitigates these areas of supply, to then look for confirmation shorts to continue targeting those weak lows. Okay, one more thing quickly before I hand over to Hine. I wanted to recap an Asian liquidity model that I saw a couple of my members got stopped out on this morning. Okay, so over here we had a valid S&D level that created the internal breaks to the upside with holding the Asian liquidity. So yes, it was a good Asian model after the sweep to look for your longs, which gave initial mitigation, the initial reaction, the sweep of that low. So that would be our accumulation, manipulation, displacement, fair value gap, market structure shift to confirm the distribution, pull back into fair value gap to continue long. Now, a couple of you guys got stopped out after this pullback. Okay, so the main reason why this market wanted to go short, well, is if we look at the 4 hour time frame, and this again is where it's so important to have that higher time frame narrative, is we are in daily supply. Price is due for a 4 hour pullback. So therefore we can expect the M15 to start shifting bearish to target those strong lows, especially after this 4 hour liquidity sweep, which was the manipulation of the accumulation, which was good confluence that we're now going to target those strong lows. So therefore going long over here, yes, it was phase A longs, both M15 pro trend and 4 hour pro trend, but it's against the expectation of order flow. So therefore, rather waiting for your structure story to form, which looks like those M15 lows are going to be targeted after that M15 closes, we can then expect that 4 hour pullback to start. Okay, so hopefully that just answers the question that a couple of my members had in the Discord this morning, is longs that they took on that M15 Asian liquidity model and why it didn't play out is simply because it's against the expectation of the higher time frame. Okay, so do you guys have a good understanding of why longs weren't exactly good probability? It makes sense. I see why you guys took longs. All right, M15 break, M15 pullback. We had price mitigate the discount of this range, that internal change of character or bullish shift with a demand zone, Asian liquidity. I can see that it was potentially a beautiful setup, but this again is where the M15 is not enough to give you overall context of the market and why the higher time frame narratives are so important, understanding that we are due for a 4 hour pullback. Okay, so do you guys have a good understanding of what we can potentially expect from EU, the breakdown of EU this morning, the reason behind why it's doing what it's doing, before I hand over to Hine? Currently looking at the same plan on EU. Yeah, 100% valid trade plan. And again, as long as it's your trade plan, and it's important that you learn to trust that trade plan. Explanation is spot on. Thanks, Jay. Yes, sir. Okay, remember guys, if you guys have any questions or if there's anything that you're confused about, please do ask on chat. For example, it can be something specific such as, why is this a break of structure? Why was this an internal break? Remember, every single structural point has a reason for being a structural point and a rule behind it, which again, a lot of the guys from HVDFX or MM Funded would understand the rules behind it. But for those of you guys that are not from the community, I really recommend go through the structure types content that I've got on my channel for free. If you aren't keen to join MM Funded, there is tons of course content on my channel, which will give you a really much clearer understanding when hopping onto the streams with us in the mornings. Okay, but let me hang over to Hine he can show you some potential markup trade plan that he has in mind for this morning or going into next week. Okay, over to you, Hine.
Good morning, guys.
Let me just quickly shift your screen. Okay, you guys should be able to see Hine's screen.
Okay, cool. Good morning, guys. Yeah, welcome. Just to say welcome again. Thank you for joining in us today. I think let me just quickly go over you as well and just look at my outlook as well. So if we're going to start off in the daily, as we did explain yesterday, we did have our daily change of character over here where we broke these lows. So now what we're expecting is because we have our two breaks of structures on over here, and we just set our change of character, we would then be looking for something like this to happen and to continue to the downside. So keeping that in mind, what we are then going to look for is the pullback is obviously already started. So now what we would be looking for is reversals off of a daily POI or 4-hour POI. I did also explain to you guys yesterday that this is a daily POI in my opinion. So you can see the market is reacting off of this POI at the moment. So this could potentially be the end of the pullback for us to continue down, to continue targeting those weak lows. Going down to the 4-hour time frame.
Sorry to interrupt there, Hine. I just quickly want to answer one question here in the chat. Jason says, I went long on the Asian liquidity model. Do you understand why it was a valid trade plan? Yes, but why it was lower probability? Because understanding the 4-hour higher time frame narrative that we are due for a pullback, and we confirm that with the M15 switching bearish. So therefore the expectation would be for price to target those M15 strong lows, especially that we're coming off daily supply after the 4-hour break. Okay, but sorry, Hine, you can continue.
Thanks, Jay. Okay, yeah. So as we were saying, back to the 4-hour time frame. So now we have our daily narrative. So we have tapped into a daily POI. Now what we're looking for is what narrative can we get from the 4-hour, right? So we have just had our 4-hour break structure. We have created our new week high over here. Let me just quickly mark that out for you guys. Week high, right? So obviously we target our week highs and our week lows. But however, in terms of our daily narrative, we know that because we just had this break of structure, we are now looking for a pullback on the 4-hour. So we still need a pullback from the 4-hour time frame. So now on the daily, we know that we could potentially be moving to the downside because we are maybe finishing this pullback. Like I said, we don't predict price, we react. So we will see what the market gives us. And then on the 4-hour time frame, we are meant for a pullback as well, as we did create this break of structure. So keeping that in mind, going down to our lower time frame, the 15-minute, we have our break of structure to the upside over here, closing above this high. And then we did have our change of character. As soon as this closes below this low, we would have our change of character. And then what we could start looking for is to start targeting some sell opportunities all the way down into some potential areas that it could reverse off of again. As we say, the market can obviously follow bullish order flow on the 4-hour, but in terms of the higher time frame narrative, we can potentially start looking for sells all the way up into this 4-hour POI over here. So before I move on to the next pair, if you guys can just let me know in the chat if you guys do understand, if you guys have the same trade plan as well, same outlook. Otherwise, I will be moving on to GJ.
EU made a M15 boss with Asian high liquidity resting below our supply zone. Okay, let me quickly switch to my screen to show you what I'm having a look at. There we go. Okay, so the Asian highs are currently resting just in this area of interest over here. We do have a valid supply fractal range over here. So again, if price creates that M15 swing break to the downside, this supply zone also in, well, more or less, we can confirm that with our fib tool, more or less at the equilibrium of the entire swing range. So yeah, if price pulls back into this area of supply, we can look for 1-minute confirms to continue shorts, riding the M15 Pro trend, and also understanding that this is all due for a 4-hour pullback, and the extra confluence that is added to the confirm of that 4-hour pullback is especially after that 4-hour liquidity sweep. Okay, no body break yet, 100% correct. So I would like to see that body break, which will then confirm new strong highs, break of structure, and the new week lows will start after that pullback starts. Okay, so it's just a wick at the moment. Haven't had that break of structure yet. We've only had internal structure, but the swing hasn't shifted bearish yet. Okay, but yeah, back over to Hine. There we go.
All right. So moving on to GJ, just starting off on the daily. Okay, so we can see that we have just had our daily break of structure about 3 days ago. So now what we can be seeing is we can potentially be looking at a intended pullback now. So if we go over to the weekly, and I don't often go into the weekly, this is just for narrative purposes. If we do look to the left, we are coming off of a weekly POI. As you can see on the daily, we have actually closed above this POI, but on the weekly, we have not yet closed above this POI. So what that could mean is that we could still come to the downside, and then that obviously complements our I wouldn't say prediction, but the order flow that after this break of structure, we then want a pullback into potential daily POI. So we have a POI over here, POI over here, and a POI over here. I think I did mark this out yesterday. So what we could potentially look at here is a pullback into these daily POIs over here, over here, over here, and then continue to the upside, targeting those weak highs. However, for the outlook for the rest of the week and for next week, for now, is let's just go down to the 4 hour. We had our break of structure to the upside again over here. Again, after this break of structure and this extension move, we obviously are looking for a pullback into some type of demand zone. And then look, going down to the 15-minute, we had this massive extension move after all the news. And then we have had internal breaks of structures to the downside, starting that pullback on the 4 hour and the daily. So potentially what I would be looking for is I would be looking for sell opportunities all the way down into this zone over here. So potentially a trade that I would be looking at for next week would be off this POI over here. And then obviously we would wait for some inducement to occur, and then taps it, and then hopefully taps us in and then continues to the downside. Otherwise, I don't really have anything else on the cards for today. Jared, otherwise in EU, what are you looking at for next week Monday?
Next week Monday, I would like to just really see the continuation of the M15 order flow switching bearish to ride a bit more of that pullback. Let me just quickly switch to my screen. All right, so yeah, obviously Friday today, so I don't think the volatility will be too great. This week has mostly just consisted of partials BE, partials BE. Again, just executing the trade plan, looking to follow throughout that M15 order flow. And I like the fact that we've now swept the 4 hour highs, which on the 4 hour time frame is our accumulation, manipulation, confirmation of the distribution. So if the M15 swing now shifts bearish with the candle body closure, that will be the confirmation of the start of the 4 hour pullback. So yeah, going into next week, I would like to see price potentially continue a bit bearish today, have these supplies set out for Monday, to then potentially look for a short trade plan going into Monday morning. But again, I don't need to worry about predicting that now. I will hop onto the charts on Monday morning and just react to what price is printing for me and formulate a trade plan from there. What could also happen is price could potentially on Monday want to continue targeting those weak highs. M15 still shifts bullish, and again we mitigate deeper demand, and the expectation continues to at least shift bearish to then continue the overall 4 hour pullback. Anything can really play out. That is why again it's so important to learn to react instead of predict. And what could also happen is we could continue bearish here, mitigate the discount, then understanding going into session Monday morning, it's going to be a better probability if that M15 starts to shift bullish is to continue with phase A longs, which is M15 pro trend and 4 hour pro trend, to rather continue targeting the M15 weak highs and the overall 4 hour weak highs. Okay, so again, there's really 3 different scenarios that can play out, but I will react to what price is doing on Monday morning when we hop in stream. Okay, and we'll just follow through, and that's basically what every stream is going to be, a follow through of price, the trade plan every morning, and just consistently updating you guys on that. Keeks Willis, just letting you know, I hear you in the left ear, but Hine in both AirPods. I think it's because it could be this mic is only set to monotone, which I know it only flows through if you're listening on a headset onto one ear at a time. I'm not sure why it does that. I must look into a fix. But I did recap the stream yesterday. The audio did seem clear and fine. But yeah, just to answer the question, what I'm really looking for in EU on Monday, again, is ideally, for me, highest probability is to continue looking for those phase C pullback shorts. Otherwise, if we mitigate the discount of this range, the probability of still riding that pullback after the mitigation of discount is going to be lower probability, because as we start to mitigate discount, the expectation shifts, and that's where you've got to manage that for that M15 to start shifting bullish. What could also happen, if you keep in mind the daily, we could continue bearish until we take out that 4-hour swing strong. Then all that changes is this becomes a 4-hour strong high. After that M15 then shifts bullish, that will be the new 4-hour week low. We can expect a bit of a 4-hour pullback, confirming again with the M15 into areas of supply, for the M15 to then start shifting bearish, to then look for phase A shorts, which would also be daily pro trend, to target the 4-hour week lows, and even potentially the overall daily week lows. Okay, so yeah, again, everything that you mark out, your ideas or your speculation of price, don't worry about that until price gets there itself. Okay. Hi Jay, what is your management plan once in a trade, such as risk per trade, break-even point, and when do you take partials? Most scenarios, I take fixed partials at between 4 to 5 risk to reward. If I'm targeting a long runner, like we did a couple of weeks back where we got that 30R on EU, then I like to secure partials usually at the most internal week highs, or at about at least 8 to 10 risk to reward. So for example, let's say, all right, we have that 4-hour shift, M15 pullback and the 4-hour pullback, and now I'm looking to get involved in shorts here to really get that tight risk to reward, to target those long week lows, and we're going for a full runner. I usually like to set a fixed partial point at about 10R and let the rest run from there. Okay. So that's why I'm working towards joining. Need a game changer? Yeah, well, I recommend just keep joining the streams here. This will be more than enough value for you to start understanding these concepts and ultimately finding potential gems that can help you in your trading career to find your edge and ultimately become consistent and profitable yourself. But yeah, hopefully at Slade ZA that answers your question on how I really manage my risk. If I am targeting, for example, a counter trend trade, for example, let's say, all right, here we had this internal break, and I'm looking to trade these counter trend pullbacks. I usually only target a fixed 3 or 4R. I don't take partials. I let that full runner run, or it's a -1 and onto the next trade plan. So it's only usually the longer runners when I'm pro trend that has the much higher risk to reward that I focus more on securing partials. Okay. We're very lucky to get this for free. This is valuable stuff. Yeah, well, ultimately, again, it's very difficult to find good quality information out there on social media, which is a big reason, well, Hine and I have decided to start these streams, is because to give people the opportunity to have the access to information like this. Slade, Jay. Thanks, Jay. You're welcome, Slade.
I think just adding on to what you said there, Jay, I think a common problem that I don't really enjoy in the trading industry is gatekeeping, you know, only putting out so much content that is helpful in a sense, but not always, you know, to the point where it can actually change someone's trading, and then they gatekeep it with a course. And I'm not saying there's anything wrong with selling a course or having a mentorship, a paid mentorship, but at least, you know, I think one of the most amazing things you can do as a business is provide a lot of free content. As at the end of the day, you're not in this industry, or I would say in the mentorship industry, to make money. You're there to help people. Well, I would at least hope most people are.
100%. And that's the thing where, again, it's so difficult to find the right information, because you won't know if that information is actually good and valuable until you pay for it. and watch it yourself. But by the time you realize that it's crap information, you've already paid for it. And that's why, again, I post just as much value on my YouTube channel and stream here, is because this stuff deserves to be here for free to ultimately help you guys find the right information in not just becoming a successful trader, but also understanding the mathematics and the algorithm behind price, the maths behind risk management, risk percentages, risk to reward. These are all concepts that are not spoken enough about on social media. Most people just talk about pips and showing the blue profits, but there's a lot more that goes behind that than just trading and being profitable. Thanks guys for the stream. It's full of value. You're welcome, guys. Hey guys, love the work, but what broker do you guys use to trade? So Hine and I are predominantly prop firm traders. My favorite prop firms is FTMO, Blue Guardian, and Glownode. Those are just my preferred three, the ones that I've worked with for the longest. Personal broker wise, my go-to is always Tickmill. Great spreads, hardly any commissions, and they're actually one of the most well-known in the world. Those are just my go-tos. I appreciate the stream, guys. We're learning a lot. I'm glad you're learning a lot, and that's ultimately what I want for you guys, is to get as much as value as possible. Morning, G. Guys, what time did you start today? The stream started probably about 20 minutes ago. Much love, Jay. You're welcome, guys. Also, much love to Hine. Jay, have you ever used my funded FX? No, I have not. The prop firms that I've been with are the ones that I know pay out quickly. I usually try reach up to the, what do you call it, the guys that are in the higher power positions in those prop firms, just to kind of get a feel of the prop firm. So for a fact, I know FTMO is one of the safest, simply because they're really the godfather of prop firms. They have so much money, they will pay you out for years to come. Blue Guardian, also great. Blue Guardian for me is the prop firm with some of the best trading conditions. Hine's the G. Tickmill brings back the full port memories, bro. Yeah. So Tickmill was the broker that I lost my first equity account about 4 years ago. It was the first time I ever put together like quite a large private account. And I remember I lost that account in about 2 weeks. And I couldn't eat, sleep for about a week after that. It was gut-wrenching. But again, those are the emotions and experiences you need to go through as a trader to ultimately mature yourself in your trading journey and career.
Guys, I just want to share a quick story, Jay. Sorry, and I think people would love to know this. I still remember, I think it was 3 years ago, when you first started your. This was about a year into my trading, when you first started your first free Telegram group.
Yes.
And you had your signals. Jay, if I tell you, I wanted to come to your house and physically do something to you, because you know what happened the one day is I started off with my first live account after a year of trading, and I had $1,000 in there, and with your signals I took that to $2,000. And the one day I think you took USD CAD sells, and every time it went into into more drawdown, you just said add position. I lost that $2,000, but isn't that the day you lost something like your whole account? You blew that entire account.
Yes. Yeah, and again, the reason why I'm so I wouldn't say like obsessed with not doing signals is simply because I've done them myself. I know it doesn't help other people. It won't lead to success for other people because I've experienced it myself. I've been through that journey. So I'm not only saying that because I think so, it's because I speak from experience, and that's ultimately how we learn from those mistakes and we mature and develop as a trader in our journey. Was that the 200K Rand account, Jay? There was multiple times where I closed accounts, but the first big account that I ever closed, that for me was the most gut-wrenching story, was that first 200,000 Rand account that I put together. Yeah. JP Kluter, I have a funded account. At my funded FX spreads is good, minimal, but commissions is high. The first thing that I recommend is when you're deciding on a prop firm is just have a look at the reviews, especially in their Discord server and on Trustpilot. Just have a look at what overall people are saying about that prop firm.
I think if you talk about the prop firm space, I mean, especially with what happened with my Forex fund, I think just to be safe, and if you want to be a big prop firm trader, I mean, like Jay said, Blue Guardian and Glownode and them are really good. I've seen their trading conditions from Jay as well. I personally use the funded trader, and then I have an account with FTMO as well. FTMO, you can't go wrong there. So if you guys are really, really scared of going into the prop firm space, I would just go FTMO, as they are a bit more expensive, but they are the most reliable.
One thing I also want to just announce on stream, I saw the other day that my Forex funds won their case in court, and all of their funds were released from being frozen, so maybe they are coming back, but I will confirm that once I hear in their Discord, and they confirm it themselves. Jay and Hine opening a prop firm? No, I don't think I'd ever open a prop firm. Again, I'm a trader at heart. I don't need to rely on making money through a broker or a firm itself. My focus is MM funded with my members, and then also obviously my own trading. Jay, hold guys, adding layers to a losing position. Yeah, and the thing is, that is where every trader starts. None of us understood risk management, how the percentages work in the beginning. And again, that comes down to what you see on social media. I remember guys on social media posting hundreds of thousands of rands of profits. So immediately in my mind, when I've never really understood this industry before, you're like, I want to place those big lot sizes too. So I need to get a big account together and full port, when in reality that's not how it works.
We would like to work it that way, though.
Oh, wouldn't it be amazing for all of us, eh? Blue Guardian is great, never had a problem with them. Same this side, really great prop firm, dropping gems, diamond. Sheesh, I understand where the full port comes from, yeah. Someone said, I think it was Keegs, lost my mom's $200 in one trade. I made a TikTok, it was about a couple of weeks back, where I spoke about just take out your dad's retirement fund and full port it on CPI. So it's either Lambos and mansions or just pure poverty.
Look, do you know what? Do you know what? At the end of the day, as much as that sounds scammy and I mean it's a joke, it could work.
Well, it's 50-50.
That's the truth, though. Like, it could work, but don't do it.
Yeah.
Don't do it.
That's the reason why we apply risk management very strictly here at, on the SMC Livestream Mentorship and Hine's community, is simply because if you want to make it in trading, it needs to be seen as a long-term game. Gradually building up the percentage and equity of that account, as full porting, going really all in or nothing, you will never be profitable like that long-term. Possible flip longs on EU. What do you guys think? Yeah, well, price hasn't taken out the M15 strong low. What I would like to see is that candle body closure, which will confirm the M15 internal has shifted bearish to cater for that 4-hour pullback. So again, yeah, if we do sweep Asian highs into these discount areas of supplies, definitely a valid trade plan for me to start looking for my 1-minute entry model to potentially go short and target those lows. Ideally, I wanted to see this break of structure happen. Let me actually just quickly make this straight.
Demo trade, snipe entry into poverty.
Okay.
Oh, you can call it that actually.
So on the 8-cap feed on TradingView, let me just quickly make this pinpoint here on the chart. Let me just use shift to make that straight. So technically on 8-cap, on the 8-cap feed on TradingView, this had a candle body closure by possibly 1 point. This is one of those that are just very close. Let me just put this right there. I would consider this as a break of structure. Rule-based. This is a break. It had the... Why is this moving up? yeah, rule-based, this did have the candle body closure. Okay, I just had my line a bit off. So I'm actually happy to mark this out now as the M15. Strong highs, our latest M15 break. This in the interim can be our M15 week low. Okay. So yeah, if you look very carefully on the 8-cap feed on EU, the only reason I use 8-cap is because it's the same as most prop firms. So the pricing and the chart is exactly the same as MT4. But yeah, I consider this as a break of structure, as if you really, really zoom in carefully, that body is passed by literally about 1 point, which rule-wise, that's a break of structure. So yeah, this is exactly what we wanted to see, is the 4-hour break, mitigation into the higher time frame supply. That internal, which is the M15 swing, being our 4-hour internal, has now shifted bearish. Okay, previous strong low that took out the previous week high. Pullback started, but instead of respecting the strong low, we now broke structure to the downside, which is exactly as per the expectation. So now we potentially can see a bit of a pullback, sweeping Asian liquidity using the Asian LQ model to potentially go short and target those weak lows. Okay. Let me just quickly scroll up a bit in the chat here. Grow or blow, make it or break it. Your methodology behind your whole strat reminds me a lot of Photon, and he's amazing. Yeah, Photon is also one of my biggest inspirations. So my entire system is kind of like a more rule-based way of how Photon approaches price, also a bit of Mentorship X and ICT himself, and I kind of took all of those concepts and put together my own system through years of backtesting, years of practice, and that's ultimately how I found my edge in the market, which is exactly what I'm trying to instill into you guys here, is not necessarily just copying the way someone trades, but you need to take a system, backtest it, and you will slowly but surely work out what works for you and what doesn't work for you. And again, that's how you find your edge in the market. For those that want to open a Tickmill account, they can have a $30 welcome bonus. FXCM hates me. Blackpool charts show no closure, but it will take a boss because of the market structure. Let's quickly have a look at Euro USD on Blackpool. Yeah, so Blackpool is also very, you'll have to zoom in there quite a bit. But I will just look at 8-cap, as that's the feed I use on MT4. So that it's the same on TradingView. Alrighty. I think, Hine, do you have any other potential markup that you'd like to cover? Any other trade plans or pairs that you'd like to discuss? Then we can also go over 1 or 2 pairs that you guys would like to also have a look at.
Yeah, sure. I think I've got one more. I've got USD CAD on the charts for today.
Okay, screen's over to you.
Perfect. Thank you very much. Okay, so coming down to USD CAD on the daily, we had our 2 breaks of structures over here and over here. Going down to the 4-hour. After we had these breaks of structures to the upside, we have had our start to the pullback already, and we have started rejecting. I think we did go over USD CAD yesterday, but yeah, we are rejecting off this 4-hour POI over here. Obviously, we did have another pullback over here, but obviously we haven't broken this yet. So what I would potentially be still looking for is for USD CAD to target these weak highs. To then, if we just come back on the daily, just to continue with the bullish order flow. Coming back to the 4-hour, we have identified, on the 15-minute, going down to the 15-minute, we had our change of character to the upside over here, and like I explained yesterday, we are actually coming off of a 4-hour order block. I would consider this an order block, as we did have this imbalance over here, and then we did have our change of character off that zone. So now we had our 2 breaks of structure to the upside, our recent break of structure, leaving this order block over here, and then we would wait for some more inducement to occur and then take entries off of this zone to then target these weak highs. However, I would only target a 1, 2, 3 fixed risk to reward, and then I would set BE and close 25% at about 1 to 1. There we go. So that would essentially be the trade that I would like to take today or tomorrow, depending on when the market comes out. Otherwise, that is basically all I would be looking for today.
Beautiful. Keegan asks in the chat, can you mention a few trustable small account prop firm? Again, my preferable and top 3 is Glownode, FTMO, and Blue Guardian. How to know what feed MetaTrader is using, because my trading view is always different. So when you log into your, whether that's your prop firm account or your broker, most brokers use the 8-cap feed. So when you get your email to the login to your funded account or your evaluation, it will tell you to choose, I think it's usually 8-cap demo 3 or 8-cap live 3. So that tells you they're also using the 8-cap feed. Then you can use 8-cap on TradingView and the pricing will be exactly the same. So for example, if you're using Forex.com as your broker, use that feed so the pricing is exactly the same. If you're using Pepperstone, which is another broker, I think in the UK or the States, then use that feed on TradingView so the pricing is exactly the same. Same with FXCM, Ohanda, and really all of the other brokers over here. There's Active Trades, Easy Markets, there's a bunch of them here. But if your broker, so for example, Tickmill is not obviously here, then I usually just use the feed over here that's closest to the value on MT4. So again, you can compare the value here of where price is currently at and have a look at where it's on MT4, and the one that's the closest, I recommend use that feed on TradingView just so that your pricing is more or less the similar and your POIs are also basically at the same pricing. What would you say is the best way to attempt a challenge, risk management wise? If you're a fairly new trader, I recommend stick to a fixed risk to reward. So whether that's 1 to 3 risk to rewards, strictly risking 1% per trade. It keeps it very mechanical, it keeps it very rule-based as well. Before you start to experiment with taking those longer runners, the much tighter risk to rewards, that will come with experience in time. I'm using the Samuel Co. YLD FX broker. Well, if their conditions are great and as long as they're paying you out, then I recommend stick with them. You're going to do a day in the life on your YouTube. Definitely a video I will consider to post. We actually wanted to do the other day doing Uber here in PE in the McLaren, but the thing is, it's such a process to sign up with Uber. You need all sorts of health tests. You need a whole sheet from the doctors to make sure that you don't have diseases and stuff. So we'll see. Maybe after the holidays, we'll make that as a series on YouTube.
Maybe I think we can do a video in December times of paying for people's Christmas gifts. Yeah,
I think that's also a great initiative.
Or maybe instead of that, we go and make a video. Go to Pick and Pay. You know they've got those hampers now.
Yes.
And we buy a few of them because they're only about $250, I think. I'm not sure. And then we can go give them out to P and McLaren.
I think it's a good initiative. The only thing I don't like is recording that kind of stuff and posting it.
That is true as well.
Yeah.
I agree with you.
I would do that kind of thing out of heart without having to do it for the sake of a YouTube video.
So maybe instead do the paying for people's Christmas gifts, because that you can document. That's pretty fun.
Being Santa in the McLaren, this actually reminds me, I saw a video on Instagram. A guy wrapped his entire McLaren just in Christmas lights. So I actually thought of doing something similar, and we just drive around town like New Year's Eve, Christmas Eve and Christmas Day, just with like the McLaren wrapped as a Christmas tree, then potentially giving out hampers or whatever. I think that'll be something so cool. Just a quick question here. How much do you risk on your prop firms on pro trend and counter trend trades? If I'm trading counter trend, I usually only do 1 to 3 or 1 to 4 are fixed risk to reward, risking 1%. If I'm really going for the long runners, so for example, let's say we're looking for shorts, or I think a better example will be, we get that 4-hour pullback, we now shift bullish, looking for those longs to really target the tight entry as possible to target those weak highs, then obviously on a much higher risk to reward trade like this, if you're trading this type of R, you must realize that your strike rate, which is your win rate, is going to be a lot lower. So therefore, you cannot be risking 1% per trade on 20 and 25 R trades, is simply because there is the possibility that you can take 5-6 losses in a row before getting that long runner. So when I'm trading tight risk to reward like this, I usually risk about 0.1, max 0.3, 0.4% per trade. So that the return will be, yes, the risk is little, but remember at 25R, if you're risking 0.2%, your return is like 4-5%. Okay. I want a GT2 RS in my hamper, please. The GT2 RS and the 911 Turbo S is the only two Porsches that I really love. But maybe if you've been good enough, Santa will put one under your tree.
Must be a big tree.
Yeah. I want a case of Monster for Christmas. And Tinkies.
You and Tinkies.
J-Mo actually started the whole Tinky thing. His like trading pack is a can of Monster and a Tinky.
Do you know how excited I got when I got Tinkies in my lunchbox at school?
I just want a decent mentor for Christmas. Well, here we are on YouTube. You can join every stream, and this is exactly what this is for. Just wanted a MM funded coupon in my hamper. Well, both MM funded and HVDFX. We have our Black Friday coupon is still running until Sunday. Can you mention a few small account prop firms that are trustable? Blue Guardian, Eptimo, and Glownode. I was pretty disciplined. Does that count?
Can I have a deadlift bar, please? Oh, Edgar.
I want a funded account for Christmas. Well, what we actually want to test, maybe potentially in a stream next week, is getting 2 phase 1 challenges, just 1 phase challenges. Blue Guardian has them, is to full port sells on one, full port buys on the other. One's going to fail, and one's going to obviously pass, but theoretically it should. Practically can always be a different story, so we want to actually try it on stream and see if it's possible. I want consistency for Christmas. Consistency will come in time with practice. It took, well, me personally, nearly 5 years to properly break through with trading. There's some guys in both HVDFX and MM funded that's been doing it in months. So everybody's journey is different and personal. That's why it's so important to really not compare yourself to others and focus on your own journey as much as possible, and do it for you. Jamie sends me photos of his Tinkies.
I think Jay and I spoke about it this morning. It's all about leadership. If you have the right leaders and mentors in your circle and that are mentoring you, you don't have to make some of the mistakes that they made. So at the end of the day, you don't have to wait a year or two before you become consistently profitable. You just have to have the right understanding, have the right knowledge, and have the right material, and you should be A for away. And obviously some hard work as well.
Yeah, 100% agree with that. I got a little satchel and bought about 100 roses. Rode around CPT on the bike handing out roses for Valentine's Day last year. It was fun. That's a very nice initiative. This is the best gift. The market consolidates and both violates max drawdown LMO. Yeah, that's why I say theoretically it's possible. So actually, if you actually have a look, let me quickly shift to my screen here. I think CPI was a good example we actually spoke about in yesterday's stream. So let's say we're entering about 15 minutes before CPI kicks in. All right, we've entered longs here, and we've also entered shorts. Now, this violent move down might kick out these longs, then your buy account is stopped out. And then this big move up obviously kicks out the sell account. So now you've lost both accounts at the same time. So that's why I say theoretically it's possible, but practically could be a different story. So that's why it'll be fun to actually test it and see if it works out live.
I stay alone and usually get bored while waiting for New York session, which makes me sleep off and miss New York session almost every day. And I usually feel bad about it. How can I manage to fix it? Besides not sleeping, I would honestly say instead of sleeping off, keep yourself busy with other things. I mean, I find this as well. And Jay, I don't know about you, but being full-time at home, sometimes you do tend to get a bit bored. That's where you have to kind of make the effort of keeping yourself busy with other things, maybe going out, having a coffee, staying busy with other things, content, maybe, you can even play some games or something. I'm not going to say you're going to have to go start a business every time you have some free time on your hands.
We actually spoke about this morning as well. And trading can be one of the most boring games out there, especially when it becomes a full-time thing, because when you started, yes, it becomes hype. The possibility of making returns and income that you never thought was possible is now there. But once you start to do it full-time, it really becomes like a job. And every single Friday, Hine and I meet up with a bunch of people, a bunch of like-minded, driven guys, and a lot of them have traditional businesses with staff, offices. They are always around people. They are running a team. Their social life is, they're always around people. Whereas as a trader, your life basically includes sitting on your PC in your office alone every single day. And it can affect you emotionally. And that's where it's so important. Outside of trading, how you look after yourself will really determine the type of trader that you are as well. So that's why out of trading, it's important to stay in contact with friends, family, do things outside of trading, get out the house, start a hobby. For example, my hobby outside of trading is, we often go for camping trips. We go for drives to the other places around here in SA. I create content. I do the streams. So I'm not just all the time on the charts. And you need to look after yourself outside of trading as well, such as how well you sleep, eat, that all adds up to the type of discipline you have when it comes to hopping onto the live charts every single day. Okay. I don't know what you think about that, Hine.
In terms of hobbies and getting out of the house?
Yeah, just ultimately not making trading not really trading, but being stuck in the office all day, obsessing over the charts. I know the feeling, I was there, but it is important to look after yourself and do other things outside of trading.
Well, I mean, it's easier. I mean, let me ask you a question. If you hop onto the charts, let's say, besides the streams, besides your mentorship, how long does it take you from when you hop onto the chart to when you are finished analyzing and know what's happening for the day, if there's going to be opportunity or not? It doesn't take that long.
Not really. So every single morning, I wake up at about 6:30 to do the markup for the community, which I then post half an hour before the stream starts. So it takes me about max an hour and a half.
Exactly. So, I mean, at the end of the day, if you are, let's say you're a full-time trader and you don't have a mentorship and you don't make content, which is completely fine. Sorry, just quickly out of the corner of my eye, the McLaren 4x4. That's enough.
Lambo did it, so where's the excuse for McLaren not to do it?
I mean, even Porsche came out of the Dakar version. But anyway, coming back to what I was saying is, you have to find that hobby. Because if, like I said, like you said, it doesn't take that long. Even for me, it takes about 30 minutes to mark up my, let's say, 6 pairs. And then for the rest of the day, if I don't have an opportunity, I'm literally just, I have nothing else to do. So that's where you have to go out for coffee with a mate. You have to find a hobby. I mean, a lot of traders, they go play golf. Jay, you do bowling on the odd end. And then, so I think it's just, I can name a few, but I mean, finding a hobby outside of your house, because at the end of the day, you sleep here, and you don't want to be in the same place that you sleep 24/7. It's mentally bruising.
It is, yeah. Again, what Hine said about doing things like, for example, what I do on weekends is sometimes I play cricket. In the week, I'm part of a 10-pin bowling club. So I'm still involving myself in other social groups, entertainment, which ultimately keeps me in check with myself. I'm not just at home all day, alone, obsessing over the charts. And that's a very important aspect of a trader's career, is how you look after yourself outside of trading.
Sorry, Jay, just want to add something there again. Remember, guys, trading is such a mental thing already, and you've seen this with how trading can be. So, essentially, the question I would ask myself, and what I have been asking myself for this past year, is why would you make it more mentally straining on yourself than it already is? And that's been one thing that's really changed my perspective on trading, is not so much the trading itself, but what sitting at home does to you. I mean, I told Jay this probably a few months back. There was a point in my trading career making, good money and being a consistent trader, but where my mental health was going down the drain because I was sitting at home all day. And I told him I was happier at my previous job where I was earning less than 10 grand a month. But I was interacting with people the whole time. I was out and about, so when you realize that you're happier doing that, doesn't matter. I mean, the money obviously is good, but that money is not everything. So yeah, that's just my 2 cents. I mean, sometimes I would sacrifice a bit of the money just to regain that mental health or that happiness, I guess. So it's a bit deep, but it's the truth.
Yeah, and I think it's a very important topic that you spoke about there, Hine. That's that looking after yourself outside of trading, to look after your happiness is so important. I actually like being in my cave all day. I'm antisocial like that. There's nothing wrong with that. I also love being at home. I love working from home. My office is here, and it's like your happy comfort zone. You look like a bowler, Jay. Well, in terms of cricket, I was actually a batsman keeper. But when I talk about bowling, 10-pin bowling is what I do in the week. Jay or Hine, when were you still learning to trade? How many hours a day did you learn to practice? Like, for instance, before you became profitable? Again, when I talk about how I know it's so important to look after yourself outside of trading, because I used to be that guy that was just so obsessed in front of the charts. I constantly just wanted to learn, get it right. And I slowly but surely realized that obsession was really just actually a drive and a passion. And also, I started to become very antisocial. I didn't hang around friends anymore. I lost a lot of good friends. And that's ultimately because I've been there. So to answer your question, I've spent probably years, especially the first 1 to 3 years, nearly daily on the charts, going over course content, going over YouTube videos, mentorships, trying to trade on the charts myself, identifying supply, demand, whatever strategy I was trading at the time. So I would say before I became profitable was at least after 4, going into my 5th year into trading.
I'm trying to add to that as well, Jay. Stefan, I'm guessing you're asking the question because you want to kind of compare what you're doing to what we're doing. I could be wrong, but it feels like that's why you're asking the question. And, let me quickly explain becoming successful in trading as a concept. And it sounds easy, okay? So, firstly, you backtest a strategy and you make sure it works, okay? I can't tell you how much time that's going to take. It could take you a few hours a day. It could take you an hour a day. Backtest a strategy that works. And if it works and it's statistically proven, then it works, then it's fine. Now, second thing, now you have to be able to apply a rule-based outlook on that strategy so that you can apply it in live trading without getting your emotions involved. And I can guarantee you, if you've got a strategy that works and you can apply it in the live market like you do while you're backtesting, then Bob's your uncle. There's a lot more that comes to it, but I mean, essentially, that is profitability in a nutshell, is having a strategy that works, being able to apply it in the market. and obviously having some capital on, but besides the point. And there's no point of trying to overcomplicate it. I mean, having those two is already 90% of the way. Jay, do you agree?
I do agree. And like you said there, one thing you said there, having the capital, well, this is where prop firms are here to help you. I mean, you can sign up for a $10,000 account. I think they cost anywhere between $40 to $60, sometimes even cheaper. And then, yes, you have to pass the evaluation. But once you get that right, you have access to very life-changing capital. And that's ultimately why I think prop firms is one of the greatest inventions so far in the trading industry, is that it will help so many people that don't have access to the large amounts of funds to now give them the opportunity to access that. How many years on SMC? I've been trading for about 6 years. SMC, well, how I'm trading now, SMC, 4 years. The first 2 years, I was a lot more focused on support resistance, EMAs. I researched all of those types of concepts, which for me, I could not find a way for that to work for me.
Yeah, personally for me, I have been trading for about 4 years now, and SMC, I have been trading joint together about 2 years. Just to be open and honest about it, I traded SMC when I started off trading in 4 years ago, or 3.5 years ago, and then I did a lot of strategy hopping, which was my beginner's mistake. Traded SMC for about 1.5 years after that, and then only recently, about, I would say, started this year, got back into it again. So honestly, my journey hasn't been perfect, but yeah, so now SMC is obviously the main way I trade and the only way I will trade from now on.
I can promise you not one trader's journey will ever be perfect, because all the mistakes, everything that you're doing now adds up to a so much bigger picture, and it's taught you the lessons that you've needed to learn to become the independent trader that you are today.
Travis, could you maybe give us a little bit more info on challenges the prop firms give you? And are you speaking in terms of the sizes that they give you, or how they work?
I think also the rules.
The rules, yeah.
Let me actually open up Blue Guardian over here. So I'm just going to use Blue Guardian for example, and I'll break down the rules for you. Okay, so Blue Guardian is one of the main prop firms that I use. And if you scroll down a little bit on their page, they've got different evaluations. Now, what an evaluation is, it's like almost like a test that you do with this company to prove to them that you're a profitable trader before they give you a live account, because they're not just going to give anybody $10,000 or $200,000 to trade with. You need to prove to them that you're profitable first before they give you that. So if you choose a challenge, for example, let's say a $50,000 account, there's two specific phases that you need to pass. Phase 1, you need to make a profit target of 8% on the account. So if you can get that 50K account to $4,000, you'll pass phase 1, which you go into phase 2, which the profit target is then 4%, which on a 50K is $2,000. But then you've also got rules within these accounts. So for example, you have a maximum daily loss, meaning in order to make that 8%, you cannot go into drawdown or lose more than 4% of your account per day and 8% overall. So these are the only real important rules that you must understand when taking an evaluation. And again, this is why we talk so strictly about risk management. The risk percentage per trade is to make sure that you're safe within these rules and also consistently profitable, and that you're not over leveraging and risking entire accounts per trade. Okay, so once you pass phase 1 and phase 2, you then get your live account, where any profits that you make on that account, you then get paid out. I think it's bi-monthly, so every 14 days. Okay, so does that kind of give you a little bit of insight into, well, an example of the prop firm I use and how the rules work? I was lost in retail concepts for years. SMC just makes it so clear, but still learning. Yeah, again, the biggest thing people, I think, and I've seen this in a lot of SMC courses, is people teach, like structure, supply, demand, but there's very few mentorships and courses and traders overall that I know that can actually break down the complete top-down understanding of price. So for example, this morning or yesterday afternoon, all right, traders saw beautiful supply zone, break of structure with all the criteria it teaches you, and we entered but get stop out, and people ask themselves why it was such a perfect supply zone. It's simply because, well, once you have that overall understanding of higher time frame, all the way from that daily to the 15-minute structural story, the SMC supply and demand zones you start to learn are only really used as areas of interest to confirm riding the direction of structure. And that's something for me that a lot of SMC courses were missing out, and even something that I find ICT concepts were missing out on, especially the silver bullet model, the Judas swing model, is that a lot of the time, and I spoke about this yesterday, I find that it's trading counter-trend simply because there's no understanding of the structural story of price before incorporating those models. And that was for me the biggest game changer in my SMC trading career, is understanding price as a whole, the overall clarity of price, and then going into depth by looking for the higher time frame POIs that we can look for our entries with in line the higher time frame intention, and then the internal time frame intentions that confirms the higher time frame. Okay, so hopefully that will kind of give you an idea on what changed my career in terms of SMC. And where I really started to find my edge with this. Lots of momentum on EU. Yeah, so for me at the moment, this is just a bit of an M15 pullback. Again, we can start to look for our lower time frame confirms in the discount of this range, as the expectation is to respect these strong highs and continue with a bit more of a 4-hour pullback. The prop firm trading rules also help so much to learn risk management. Yeah, that's actually one thing I've spoken about on a few streams, is that the risk management prop firms teaches you. If you can apply that on a personal account, it really, well, imagine what you can do on a personal account with the risk management rules that you've learned with prop firms. And that's one thing I love about prop firms as well. It really teaches you risk management properly.
Give me a sec, Jay. I'm just going to quickly go to the bathroom.
No stress. Thanks for the cool music, Hine. Can't wait to have my trading room and play such cool music. It makes me, it makes someone feel so focused. Yeah, so all we're all traders from home. My office is upstairs here at my house. So I don't need like a fancy office and that, and this is my home, this is my workplace, this is my comfort zone where I get everything done. Jay, when you have multiple S&D zones, do you just take the first one that gives you your 1 minute confirm? So for example, what I like to use as a confluence is in the M15 ranges is firstly, is that zone in premium or discount? Remember, supply, you want to be looking for shorts in premium. Demand, you want to be looking for in a bullish example. So for example, from this swing low to this previous swing high here, this would be discount, premium. You ideally want to look for the demand zones that are in the discount of the range. And secondly, if apologies, let me just put that back. If we have two zones in the discount or the premium of that range, so for example, we have one here and we have one here, as long as either one of these zones match, I can't remember where I put that, the 4 criteria, I think it was on the 4 hour, yeah, these 4 criteria here must be unmitigated, it must create a fair value gap, needs to create the break of structure, and needs to have the liquidity. So what you can do is you can hop over to your POI and check that off as we go. Okay, this zone here has created the break of structure. It has created the inefficient push with the fair value gap. It is unmitigated. Price hasn't pulled back to the zone previously. And fourthly, we do have resting liquidity over here. So yes, the first zone is a valid institutional level. So therefore, if price, well, ideally, creates that double top liquidity. Okay, even this zone here, we have the valid Asian liquidity. So we could see a sweep into this zone to then look for our 1 minute confirm to go short. So yeah, I'm happy to look for, well, in this scenario, we have 3 zones, but all 3 of these match our 4 criteria. So therefore, as price approaches the first one, right here, we have our resting liquidity. If we get that sweep and the 1 minute confirm prints, that will be a valid trade plan, simply because this zone matches all 4 of your rules to be a higher probability institutional level. Okay, so I hope that kind of answers your question. So if in a scenario of, let's say, the supply zone was already mitigated, okay, then this would not be a valid area of interest for me to look for my confirms. I would then wait for price to sweep the zone and mitigate the next zone that does have all 4 of your criteria. Okay. Does that answer your question enough? Or is there still... Do you have a clear understanding of when we have 2 zones in, for example, a range, and you're not sure which one to enter off of? I would like to see EU taking out the Asia highs LQ. Yeah, so for me, a institutional level that holds the Asian liquidity is a very good valuable zone. But again, it's not guaranteed that price will run from there. That's why we have our lower time frame confirms.
You guys helping me see it all better. Thanks, Jay and Hine. Zander, no problem, Avad. You are most welcome.
Use imbalance for higher probability. Yeah, again, so that comes down to these mechanical 4 criteria here that I teach to the members at Funded in marking out your institutional levels. So it's like a mechanical checklist that you can tick off on each and every zone, and that kind of hides out a lot of the noise and helps you avoid to mark the zones that are lower probability. Something that is helping me every day with the streams is doing my own analysis beforehand and then comparing it to yours. Thought I'd give that idea for others. That's a very good idea, and that's exactly why every morning I post the full top-down analysis in the channels, in the Discord, is so that it's there for the members to compare their markup to mine, and ultimately that's how, well, if you compare that every single morning, you will slowly but surely understand what you're doing wrong, what you're doing right, and ultimately correct the mistakes that you're making. And slowly but surely, you will start to see it without even having to mark it up yourself. So again, like we spoke about in yesterday's stream, all this is, it's a muscle memory game. It's a game of consistency. Applying markup, the trade plan every single morning, you eventually do get to a point where you can actually see it without even having to mark it up. That's why I often like to call trading or associate trading, it's like learning a new language. It's in the beginning, it's completely foreign. You have no idea what the words mean. You have no idea what you're saying. But as the months and the years go by, speaking it becomes like second nature. Like we're all able to speak English now. When we were kids and we were young, we had no idea how to speak English, but our parents taught us. And that's exactly what trading is. Over time and over the years, it becomes fluent and you start to, how can I say, quotation mark, speak it without even really thinking about what you're saying because you understand it through muscle memory. I hope that kind of makes sense. I'm not sure if you guys agree. Hine, what do you think about thinking about trading in that manner?
No, definitely. I think it's like learning how to read music. I mean, to me, when I look at music, and all those, those markings, what does it mean to me? It doesn't mean anything to me. But as soon as you learn music, then you start having to look at the music and, go part by part, and it starts becoming easier and easier and easier. And then at the end of the day, after doing it for long enough and spending all the time grafting, you can just look at a song. It doesn't matter any song. You don't have to learn the song. You can just play the instrument according to what you're reading there. So I think it's about the same thing. So it's just about showing up every day and learning something new. Because even you and I, Jay, we learn something new every day when it comes to how the market moves, why the market does, why it does. I mean, it's a constant journey of trying to increase your knowledge. But yeah, I definitely agree with you saying.
Yeah, 100% agree. And you'll find, look at an example, ICT. He mentioned in one of his Instagram videos or one of his YouTube videos that he's been trading for 33 years. Now that's long before like computers even existed. That's back in the days when you used to go to the bank and you write your trade entry on a pink slip and you hand that into the bank, and that's how you place your trades. And so all of his concepts, even what I'm saying is 20, 30 years later, him himself was still learning about price. And that's ultimately our 6-7 years experience in the charts. Yes, we're potentially disciplined and profitable traders today, but there's still so much more to learn. You can never stop learning in this industry, and as a matter of fact, any industry really.
Sorry, Joe, are you playing background music by any chance?
I am, yes.
Okay.
I've nearly started singing along, doing some karaoke here. These songs are bangers.
Because I can't hear it. No, it's fine. I just wanted to double check.
There should be a way for me to...
No, but it doesn't matter as long as they can hear it. I don't need to hear it.
Okay.
The sound of your voice is a
Soothing.
monotone.
According to some people that were using earphones, they can only hear me in the left ear.
Yeah, but they can hear me in both, so I don't know. Listen, I think everyone should comment in the chat. What's the next car they're buying with their next big payout when they get it from a prop firm? I'm not saying you have to. I'm just saying, if you were to buy a car, the next one, what would it be? Jay, what will yours be?
My ultimate dream car is a McLaren 765 LT. And hopefully next year we will have a local one in PE.
I like that.
Yeah.
Mine personally, I would love to get an R8.
I think the R8, for me, is the best daily supercar that you can buy, above and beyond McLarens, Lambos, whatever else there is, Ferraris. The R8, a beautiful daily car. Hine, you
T8.
texted me, bro.
Oh, I'll get back to you, Mo. Don't worry about it. C8, is that the Corvette?
Yeah, the C8 Corvette.
Do you get those here?
There's one in, they're not sold locally, but I know there's one in Bloemfontein. That was an import.
Oh, wow.
McLaren P1, oh yeah, dream car. Ferrari 812 Superfast.
Beautiful.
I love V12s. Mustang, man, those cars are nice. Audi TT RS, Sirocco R, Jay already knows. Yep, those are absolute supercar killers. Golf R, flip a nice car.
I just want to quickly shout out to Borschi because that's the only guy that says he's going to buy a car for his wife when he gets asked what car he's buying next.
An M2 for his wife.
I like that.
That's beautiful.
I really do. Well done, Borschi.
1985 Porsche 911. There is nothing better than classic vintage exotic cars. 911 Turbo S, also my favorite Porsche. Audi R8, beautiful car.
R8. What a beautiful car. You know, because at the end of the day, for the price that you can get them at and what you're getting for your money is just, you're getting a V10 and you can, what did we see the other day, Jay? You can pick one up for about 1.72 mil and you're getting a new V10.
Even the first gen R8s are amazing. And those you can pick up these days for 1.1, 1.2, which is not bad for a V10. I mean, that's what the new Golf Rs are going for, which is crazy.
Yeah. Hans, bro, she's my rock during this process. No, that's beautiful.
JMO wants a second donkey for his cart.
Second donkey for my car.
Well, at least you won't be spending money on fuel. You'll be spending money on carrots. GT 500. That's probably my favorite all-time American muscle car. Those cars are brutal. GLE 63 AMG. My dream Mercedes is the GLS 600 Maybach. All I want to do is just pull up to every robot bouncing up and down in that feature.
Land Cruiser 79 Alex V8 buck. You know what I don't like about those Land Cruisers? Insane car, but can they not just upgrade the interior a bit? Like, the interior and the exterior have looked the same for the last 10 years.
SVJ, I agree, that is the dream. A screaming V12 with a Gentani exhaust.
And some Christmas lights.
But yeah, guys, one thing I would also like for you guys to remember and take away from these streams as well. Remember, if you're seeing a person making, I don't know, $5,000, $10,000 a trade, and you're thinking to yourself, well, especially those that have these smaller accounts, you're only maybe making $400, $500 on a trade on that 10K accounts. But at the end of the day, what trading comes down to, yes, obviously having the equity helps, but if you're a trader with a $10,000 account and you're making, you let's say made 8% on a trade, that's $800, and another guy with a 100K account maybe only makes 2 to 3%, that's $3,000. Now obviously that guy with a 100K account looks much better, he's making the 4 figures, but keep in mind that trader that's making the 8% on that smaller account is a better trader than the guy with the larger account. And that's one thing I don't want you guys to forget, is imagine what you can do once you also get to the 100K accounts, the 200K accounts, and that sort of equity. And then again, that's again why it's so important to try not compare yourself to others, and why understanding trading as a percentage game, well, I'm pretty sure for both Hine and I, was a big game changer in this industry.
Yeah, no, definitely. And I think, scaling up in your funded accounts as well, when you start, like Jared says, making 10% on a $10,000 account, ideally does seem a bit easier than making 10% on a $100,000 account. But that's why I said yesterday, you have to trade your plan and not your balance, because ideally as a trader, you would like to trade with the same amount of confidence and take the same trades that you would on either accounts, whether it be a $10,000 or $100,000 account. And I think that's where people, go wrong, is as soon as they get the $100,000 or $200,000 account, they start neglecting taking trades that they would have taken. And then at the end of the day, when they do take those losses, then they don't actually make up for the wins that they would have had. So it's a bit of a catch-22 actually.
Lloyd says my best trade on a 10K was 270. Not great. Well, that depends. How much did you risk to make that 270? Did you risk $50 or $100? Because if so, then yes, that was a very good profitable trade, because your risk to reward was fantastic. But if you risked, let's say, $400 to only make that 270, then no, that's not such a great trade, because you're risking more to make less on the account. And that's ultimately where the percentage game and the risk to reward is so important for being profitable long term. Okay, so even if you make $100 on the 10K account, it may not seem like a lot, it may not seem like a fantastic achievement, but it all depends on how much you risked to make that. That determines if that was a good return or not. That's exactly my scale plan, trying to consistently grow my account size, slow and steady progress, but exponential growth. It's the right way to approach it. Less than 0.5%. So that means you risked less than $50 to make that 270. For me, that's a fantastic trade.
I would think so as well.
That's a great trade. So you don't need to say that that's not great. That's actually a fantastic trade because your risk percentage was low. Your risk to reward, which is how much you're risking to make, was very good. As long as it's the brand that Jay likes so much, the type of car that is built in 13 hours. I've noticed sticking to my trade plan and focusing on my discipline, inside and outside trading, is changing the way I trade. I 100% agree. The things that you do outside of trading, you'll often find flows into your discipline inside of the markets. Risk $400 to make 100, a win is a win. The thing is, there you're risking 4 times the amount to make $100. You will never be profitable like that long term, because if you take a loss, you need to have 4 wins just to get back to break even. So long term, it's going to be next to impossible to remain consistent and profitable doing that. And that again is that mindset shift that a trader needs, is to rather approach trading in terms of a percentage and a risk to reward game than just making profits for the sake of profits. Are you guys thinking of buying any new cars soon? I want to more focus on the property side of things. My partner and I are looking to move to Cape Town next year. So maybe when I settle there, my margin won't allow me to risk more than 0.5, so I tend to use standard lot size, which plays havoc with my risk factor. I think 0.5% risk per trade, it's a good rule. It's a safe, good rule. You posted something on Instagram quite a while ago where you compared a hand-built McLaren with a Toyota. Oh, that was the post I made, I think it was like last year, comparing the Rolls-Royce with the Toyota or something like that. I can't remember the quote I used, but I know a Royce is like handmade over 6 months. Something along those lines. I must find it somewhere.
I think a lot of traders, their goal is like the next car or the next house or the next watch. Like Jay explained yesterday, sometimes you just want to make money for your electrical bill. Like, you know, when you're a full-time trader and you stay in your own house and you've got your own car. I mean, you know, life. I wouldn't look. I don't want to say life is expensive. Life is what you make of it. So I mean, if you've got a, you know, biggish house, your electrical bill is going to be high, your water bill is going to be high, and then making trades to cover that bill, then you're a good trader. Then I respect you for that. You get it. Like it's not always about the next car, because that's all that you see on social media. At the end of the day, we are trying to still live a normal life. So, you know, if you're making money to cover your rent or just cover your electrical bill, cover your food, you know, that's more than enough at the end of the day. And obviously you just strive for more and more and better to then obviously replace some of the bills monthly. Yeah.
Totally off topic. Do you guys think vaping is rotting the new generation of people? And what is your opinion on vaping? So personally, I sometimes vape myself. I don't think it rots the entire generation. I think there's bigger problems to worry about. But yeah, ideally it's not, you could say, an addiction that you want to start. Yeah. I'm sure many different people will have many different opinions on it.
I think it's all that thing that comes down to, it's all in moderation. So vaping once or twice, you know, a day isn't that bad, I guess. It can't do that much harm. But I mean, doing it constantly, not being able to live without it, then it becomes the problem.
Yeah. I've seen a lot of people like that. If you come here, you better get a bike. I would do that. I love off-roading. I used to love mountain biking. And Cape Town's a much more adventurous place to do those kind of things. Definitely something I consider. I think I found my new favorite stream. Oh, I'm glad you guys are.
I appreciate that.
We appreciate that. I'm glad you guys are getting good value here. Sometimes, apologies, Hine.
No, sorry, I'm just reading the chat. You go on.
sometimes it's less thought. It only depends on stop loss size when using a standard lot size. So every trade, the risk is different. Well, when I trade, I don't even look at my lot size at all. I've got a calculator on MT4 desktop. Again, this is in the MM Funder Discord, where, for example, if I'm risking let's just say a random here, 1 to 3 risk to reward. Okay, so on the calculator, I'll enter my stop lot size, which is 73 points, and 222 points, which is 22 pips and 7.3 pips. And then it will automatically calculate the lot size that I need to risk 1%. So that means if this trade hits stop loss, I lose 1% on my account. If it hits TP, I make 3% on my account. Okay, so that means for every win I make, I need 3 losses just to be back at BE. Okay, so mathematically, if you have a 40% win rate trading 1 to 3 hours, you'll be profitable. And again, that comes down back to where the other person said, no, I think that was Aram 522, risking $400 to make $100. A win is a win. Yes, it's a win, but you won't be profitable long term using a risk management strategy like that. Okay.
What's Hine's Instagram? Odeon, I'm gonna quickly type that in the chat for you. Some people struggle with my name. I think Jay, for the next stream,
I must put it in the description as well. I've got your website. I must just put your Instagram. Yeah.
Right. I have $3,500 trading account, and I try never risk more than $50 in a trade. For now, I'm using this, but still need to refine this. I would say it depends on what you're using that trading account for. But if it was me, I would actually risk a bit more depending on your trading strategy, how big your stop losses are. If you have let's say, a 60-70% win rate, I would say maybe bump that up to a bit, maybe I would say $150, $200 a trade. But if you have a win rate about 30-40%, then I would say stick to about $50 to $75. I don't know, Jay, what do you think?
Yeah, again, the confidence in your trading comes from backtesting, collecting data to prove and let the results tell you that trading system is working, rather than just watching something on YouTube and you see that guy on YouTube is very successful with it, thinking that it's automatically going to be successful for you. It doesn't work like that. So one tool that I use to backtest, and you can actually simulate prop firm challenges or any account sizes in the backtesting session, is FX Replay. So it actually documents your risk to reward, your risk percentages, your total percentage return. So at the end of, for example, 4 months of data, and you've backtested the past 4 months, let's say with Silver Bullet, for example, and it will document exactly in that 4 months, your return was 15%, your average risk to reward was 2.5, and your max drawdown was 3%, and that's how you collect results and data on the different strategies that you trade, and ultimately how you work out what's best for you, and refining your edge in the markets. Collecting data and having backtesting sessions is one of the most underrated ways to really find your edge in trading. And also, a lot of people do backtesting wrong. You need to backtest as if it was a live trading session. Each and every trade that you take, follow your trade plan. Develop a trade plan every morning on those days as if you were trading live, which ultimately is the right way to backtest. As what a lot of people do is, especially when they backtest on, for example, let's use EU here, what they'll do is let's say, replay the chart. They will find an area of interest, such as over here. What they'll do is they'll play the chart, they'll have a look. Okay, price reacted, so we can go back over here. We can, for example, enter this, and we can document this as a winner. But you're cheating yourself out of the true results that would come out of that backtesting session. And I've seen a lot of people do this. They want to rush through, they don't backtest properly. So it's good and all backtesting, but you also need to know how to backtest properly. And the easiest way to do that is just treat it as a live trading session. Risk management is key. It's very important. Risk management is more important than the strategy you trade.
I agree.
I just got here. Is it almost over? Did I miss it? We started about an hour ago. The stream's been on for about an hour and a half, but we'll still be here for some time. I recommend, if you want to, after the stream has been posted, you can rewatch that as well. I'm also more than glad to recap a couple of the markup that we did earlier this morning. My wife, her brother and her mother used to smoke and all changed to vaping as an outsider from listening to other conversation, and it's 10 times better than smoking. Yeah, so the thing is with vaping, I don't think it's been around long enough like smoking has to really determine based on the data of the population if it's more healthier or not.
Yeah, I think coming down to that as well, I mean, it's the concept as well. I mean, you know, at the end of the day, smoking and vaping is some sort of an addiction. Whether, you know, it might be an addiction, it might not be, it might just be something you use for stress. So changing to vaping, but still doing it, you know, consistently, I don't think it's much better. But obviously, in terms of health condition and what it does to your body, you could actually argue that it is a bit better, yeah.
I also tend to agree that it is perhaps slightly healthier, but even though you're still putting foreign chemicals inside of you, it's still not 100% healthy. Will you guys shout out the winners in the stream today? Yes, we will. As we get towards the end of the stream, I've got a tool set up that will kind of choose like a random winner from the comments of the Instagram post, so that it is just fairly a lucky draw competition. And there'll be, again, one winner that wins the $1,200 account, and another winner that will win free lifetime access to both Funded and HVDFX. Okay, so that will announce a little bit later as we come towards the end of the stream. EU had some epic price action this week. I do agree. Very nice and clean. Hey Jay, sorry joined late, but what is your view on the break of structure? Is with a wick body or on EU to the downside? Yeah, so for me, you have to zoom in really, really closely, but the body break was literally on the closure of one point of that candle. So rule-based, it is a break of structure. Yeah.
I've gained 16 kg since stopping alcohol, weed, in the nicotine last October. Helped me on the bulk. Yeah, it would. You know, not putting all those foreign things in your body does help with actually living a healthier life. But at the end of the day, like I said, I'm not against any of those things. I would just say everything in moderation. Don't overdo it, and you should be fine. Just want to answer Jacques at the top here. Hine and Jay, you make a great duo. What do you think, Jay? Do you think we make a good duo?
I do agree, yes.
I think I do as well. I just think it's because we like-minded when it comes to the outlook of this whole industry.
Yeah, both Han and I like to look, how can I say, deeper into trading above and beyond just the charts, the emotions, the journey. We love the trading community as the whole. Being able to interact with you guys, like-minded people. CJ Trades, what giveaway is this? Yesterday on my Instagram, I posted a giveaway competition that we'd be announcing the winner of in today's stream, which was a $1,200 live funded account and a lifetime free access to both Funded and HVDFX.
Please, how do we know if a zone is fully mitigated? Sometimes the zones on 15-minute are being mitigated by some wicks, but you still do mark them out as they hold price. I think once a zone is tapped, or once the market is tapped into the zone, it has been mitigated. Keeping the zone there is just for, I would say for, well, I've lost my words here. Are
you talking about like these zones here that have now been mitigated? That I've still like got on my chart. For example, this zone, I think also further back here, I've still got all my markup. Over here,
Yeah, I think what he's asking is essentially why do you keep the supply and demand zones when they have been mitigated already?
like all of my past drawings, like these have already been mitigated.
Yeah, I keep mine on for statistic reasons, just
Yeah.
to have an outlook of the past.
Of the past, and just
What
like what I followed through past. And also, what I often do is, after about every 2 or 3 weeks, I will backtest that same period of data. So at the end of November now, I'm going to backtest November, and I'll compare my backtesting results to my live results to ultimately find like the POIs that I looked at, potential POIs that I missed, and that's ultimately how you can still continue to learn and find your edge in the market. It's just you keep on practicing. And that's also a big reason I leave my past data and my past zones on the chart. I don't look at them for the future. So for example, this zone here, I won't look at for the future. It's violated, unmitigated long ago. Okay.
Moderation is key in life. My advice is food. Unfortunately, good advice. Yeah, no, definitely moderation is definitely everything in life. Have to have balance in your life. And yeah, food is a tricky one. It's not actually a tricky one. It's just watching what you eat. I mean, you don't have to be on the strictest diet to be healthy. Just watch what you put on your body. I mean, our body is a temple and our body is a vessel. So we obviously want to look after it. So putting greasy, oily things in there obviously isn't going to do you well. So that's probably just the logical way of thinking about it. Funded account for Forex or stocks? I don't actually know of a lot of people that trade stocks with funded accounts. I know a few, but not. I think it's better for Forex, hey Jay?
Yeah, if you want to trade stocks, that's more a day trading, swing trading game. The volatility is a lot less there, but still follows the same rules of structure, institutional levels, liquidity concepts, fair value gaps. Again, once you put that all together as a system in the market, that's ultimately how the algorithm of price, where the money lies in the market, and how price flows.
Lloyd, when do you consider a trade idea invalid and remove any limits you've set? Personally, for me, it's when it's created another break of structure, meaning there has been a new low created or a new high created. And also, it's I would remove my limits before a news event if the market is close enough to my limit.
I see the stream is also streaming on Facebook, but I just had a look now. I forgot to set the title of the stream on Facebook. So the stream on Facebook is just sitting here as test stream 4.
Oh, well done.
So yeah, firstly, I can see a couple of people have joined from Facebook. Welcome if you guys are joining from Facebook. I saw another question here.
I can sometimes hear Jay taking a puff from the vape in the markups at MMF. LOL, am I right, Jay?
Yes, sometimes I do vape. Yeah, but I'm not like extremely addicted. I just enjoy it sometimes. The one with the Asia high that's below. Are you talking about? I remember now. This zone here. Yeah. So what I've done with this zone is I've really just marked out this entire fractal range. If I mark out a fractal range, I like to look at the 50%. So I'll either mark out the 50% or just kind of drag the zone to really 50%. Okay, as a supply or demand zone doesn't necessarily have to be a candle. It can also be the entire fractal high to the fractal low. So this entire fractal range can be a supply fractal range. So that's often why you'll see price or maybe pull back to a zone, run, but it didn't mitigate your candle. That's because it just fulfilled orders in the entire supply fractal range. Okay. So that's why sometimes you might see it as mitigated, but the 50% or the refined candles in the fractal range hasn't been mitigated.
You guys use buy and sell stops. I personally use limits only. I tend to not manually enter a trade or use sell stops. Mine is usually risk entering on my order blocks and then obviously putting a limit on my specific price, entry price.
Yeah, all my trades are executed manually simply because I refine to such a low time frame, sometimes even the 30-second. So I can't put a limit until my rule of, well, AMD or the fake change of character or sweep zone, all the same thing at the end of the day, plays out. Then I will execute manually on my displacement fair value gap after the AMD with my trade manager tool so that I get in instantly with the right stop loss and the right TP. That is why I don't trade on my phone anymore, because it's just impossible to manually modify the stop loss, the TP values. With a trade manager tool, it's already there for you. Your risk management is to the T because it's automatically calculated it for you. Okay, so that's the only reason I execute manually, is because it's very difficult to set orders on the higher time frame, on the lower time frame, because price moves very quickly. Forex is my main trading thing. Yeah, so I'm also the same. EU, GU, and XAU USD has really been my three major pairs since really day one. But yeah, moving forward with the stream, guys, is there any other one or two pairs that you'd like for Hine and I to have a look at, to mark up for you? Also, not just for the sake of markup, but to give you an understanding in the specific pair that you're looking at. Also, quickly, just want to recap gold from yesterday. So we eventually had that. Well, we marked out, I think, this POI on stream. All right, the M15 pullback, internal shifted bullish, understanding. This is now confirmation to continue targeting those weak highs and to ultimately cater for more of that 4-hour pullback. So gold actually played out really beautifully. We mitigated the extreme, or the more recent zone, especially after the sweep of London, instead of the extreme. But then over here, we look for our 1-minute confirms. If it doesn't play out, we wait for the extreme, look for our 1-minute confirms to go long. So gold actually really been clean with price action, especially the last couple of days and weeks, really. What are your thoughts on futures trading? Personally, I've just never looked at futures myself. I've found my consistency with my three pairs. But again, for me, futures trading, indices, stocks, commodities, all the same concepts will apply, as it's the foundation of how price moves. Can we do USD CAD and Euro CAD? Okay, I'll tell you what. I'll do USD CAD and I'll leave Hine to do EuroCAD. Okay, let's start off with EuroCAD and then I'll finish off with USD CAD. So I'm just going to quickly switch to Hine's screen. There we go. Over to you.
We're starting with EuroCAD, eh?
Yeah.
Okay, cool. Let me quickly mark out this for you guys. Okay, so immediately off the bat, we can see we had a break of structure to the downside. This would be our daily break of structure. Give me a sec while I do change this.
I just quickly want to answer a question in the chat here. So ICT is the base candle supply and demand thing then. I was curious about that when I saw the stream was upcoming. ICT is my entry model. So I use ICT concepts in my entry models. So the foundation of my system is the three structure types, which is the mechanical structure methodology that's taught to my members at MM Funded, which I'm also introducing to you guys here on stream, with the higher time frame POIs. But my ICT concepts and my entry confirms have to play out in the higher time frame POIs. So it avoids all of the noise, such as these liquidity sweeps, and remember, liquidity sweeps and fair value gaps happen everywhere, but the high probability ones is the ones that you line up with your structural story and your really high probability institutional levels. Okay, so for example, what I like to see inside of a supply demand zone, in New York session, I like to see the London sweep into a higher time frame POI. In London session, I like to see either the Asian sweep of higher lows into higher time frame POIs in alignment with your structural story. So that's where the ICT side of things come into my system, and that's why it's also in the title of the streams. Okay, but back over to Hine.
Okay, cool. So going back to the daily, we see that we had our daily break of structures to the downside, and then we broke this high over here, as we can see by this daily Koch indicator over there. So I changed the character. So now what we could potentially be looking at is, let me just quickly remove that, is now that we have had this break of this high, we can now potentially see a pullback into a POI and then potentially continue to the upside. So going down to the 4-hour time frame, we just quickly mark out our market structure here as well. We are obviously bullish on the 4-hour, looking at this 4-hour break structure, a second one, and then our third one. And then what we could potentially be looking at is a continuation off of this POI, this order block over here, because we did have our inefficient push. Okay, so going down to the lower time frame, our 15-minute time frame. I'm going to set this for you guys here, make it a bit neater. These are obviously our 4-hour and daily week highs up to the top, so we would potentially like to target them. So what I would be looking at for Euro CAD is potentially for the market to come down and have something like this, something of a bearish reversal pattern, such as this into a POI like that. So we would have our internal break structures to the downside into our 4-hour POI. We just say, there we go. And then we would have our change of character over here. I'm going to change character, and then we would have our inducement, which we need before we enter our trade, or valid liquidity, whatever you would like to call it. And then we would take our risk entries over here to then continue and end off the pullback and then target these weak highs. But then again, I wouldn't take the trade and hold it for this long. I would just end off with a 1 to 3 risk to reward. I potentially wouldn't be looking for sells into the zone. Maybe J would be on the lower time frames. If you go down to the lower time frames, we did have all these internal breaks of structures over here, over here. So as we can see, we do have a nice bearish order flow on the lower time frame. So potentially you could follow this trend all the way down into this 4-hour POI zone. But for me, I would rather wait for this pattern to form as soon as we reach this POI. But that's me for Euro CAD.
Yeah, I think that's a beautiful trade plan. Pro trend both on the internal, well, once that internal gives you the confirm on the M15, and it will also be pro trend on the swing time frame. Okay, are you guys happy with the way Hine broke down Euro CAD? Any questions or something that you don't understand? That's exactly what I want you guys to ask you on streams, is so that hopefully we can be here to answer that for you and help you out with that.
Phone trading sucks. Yeah, I know it does.
I agree.
Love it, Hine. I'm glad you understand it. You guys must just call out in the chat if you guys don't understand any concept or if it does make complete sense to you.
Okay, you guys happy to move on to USD CAD? Perfect. Okay, let me just quickly switch back the screen. Alright, so you guys should be able to see my screen. I've removed all of my drawings on USD CAD so we can start completely from scratch. Okay, so immediately on the daily time frame, I can see that we've had a previous daily swing break to the upside, daily strong lows. Okay, so we identify after that daily break of structure, pullback to continue targeting those weak highs. So rule-based, this becomes then the lowest point after the pullback that has created the next break of structure, becoming our updated daily strong low. Let's just quickly label this more formally. Daily boss. All right, this then becomes pullback, break of structure, our daily break, and the daily pullback after the internal started shifting bearish, making this our valid daily week high. So immediately, if I want to get more context on this daily time frame, we can have a look at the weekly, which will give you well, understanding in why the daily is bullish. So if we have a look over here, we've had most recently weekly swing breaks, weekly strong lows. That weekly pullback shifted after, well, started after the daily, shifted bearish, making this a weekly weak high. Okay, so the reason why the daily is continuing bullish, well, is because, well, we had the weekly break, weekly strong lows, weekly weak highs, weekly pullback has now started after the internal, that pullback into supply, after the liquidity sweep to continue with more of that pullback into, well, the discounts of this entire swing range. So what can we expect is for the internal to start shifting bullish, to incur a bit of internal pullbacks, understanding that the expectational order flow is to target these weekly weak highs. We confirm that with the daily being our weekly internal. After that's now shifted bullish to confirm and target those weak highs. So that is why the daily is bullish, catering for the pro-trend weekly order flow. Okay, so from the daily we can then hop over to the 4 hour just to get an understanding of why the or the understanding of the internal of the daily, which will then ultimately give us the understanding already going onto the lower M15 timeframes. Okay, so most recently on the 4 hour break, previous 4 hour break, strong low, pullback, respecting demand, target the weak high, new strong low, break a structure to the downside, which was the expectation after the daily break of structure to the upside, because we were due for that pullback. So this then becomes our 4 hour break. The daily weak in the scenario is also our 4 hour strong. Understanding this is a 4 hour strong high because it's just catering for the daily pullback. The 4 hour pullback then started after these internal highs went to the upside. So this then becomes the 4 hour weak lows. Okay, but this is where you got to keep in mind. Yes, the 4 hour is bearish, but we've now mitigated the discount of this entire swing range. Our M15 most likely now has shifted bullish, catering for the, well, the end of the daily pullback. And the anticipation is to eventually targeting those daily weak highs. So would it be, in your opinion, good probability to still target these 4 hour weak lows? Well, no, it wouldn't, because it's not in alignment with the overall daily swing structure. So therefore, the expectation is for that 4 hour to start shifting bullish to target those daily weak highs. Okay, so immediately looking at the higher time frames, we know that it's going to be much better probability, not guaranteed, but much better probability once the internal M15 starts aligning itself to bullish as well, to cater for the higher time frame pro trend. Okay, so if we have a look at the M15, we had, well, let's just quickly mark out our 4 hour POIs. That, oops, there we go. That 4 hour, well, could have been refined to that candle or this entire fractal range. Okay, we had that 4 hour change of character happen over here after supply failed. That pullback into demand that's now in control, which then the internal M15 has now realigned itself bullish to potentially continue pro trend to target those weak highs. And then we can start to already in our minds formulate potential trade plans going into session without even looking at supply or demand, without even looking at liquidity sweeps, because we already understand our structural bias, and we now just use our SND levels and our Asian liquidity models as confirms to follow through the structure story. Okay, so already, if I follow through the M15 break, M15 pullback, targeting the weak lows, break of structure, pullback, targeting the weak lows, mitigation of this POI, pullback, sweep of that low. Okay, accumulation, sweep, manipulation, market structure shift on the M15, pullback into demand to continue long. So even on the higher time frames, we can have accumulation, manipulation, and distribution, which again, if we follow through, M15 break, M15 strong highs, broken to the upside, strong lows, pullback started, weak highs targeted, new M15, break of structure. So the M15 is now shifting bullish, realigning itself with the overall order flow. Okay. All of these pullbacks over here just really pauses in price action. Remember, we confirm the M15 pullback once we have those internal lows break to the downside. Break of structure, slight pullback. We didn't take out the internal low. Target the week high, bit of a pause, continuing bullish. Bit of a pullback, previous week low. Another slight pause. And we've now targeted these internal week lows here. So this thing confirms the start of a potential M15 swing pullback, making this the M15